A busy week of economic data, perhaps the most eagerly awaited number of all, inflation. What's happening? What happened in July, in the year to July? We can see the path of inflation ever since the cost of living crisis began, rising up more than 11% in October 2022. Been falling, not necessarily evenly, but certainly all of this year until today. This little uptick here, this little hockey stick, an increase in CPI inflation to 2.2%. That after it was down at the Bank of England's target rate for a couple of months. So what's caused it? Well, the underlying reason, the biggest reason, is something that's no longer in the inflation numbers. This is the energy price cap chart. We've all paid attention to this as our bills have gone up. Inflation's an annual figure, and a year ago, we were counting in the inflation figures this huge fall in the energy price cap, more than £1,100. Well, this fall has now been replaced by this much smaller fall in the energy price cap last month, just about £110. When you take that number away, you have a higher inflation number as a result. The underlying numbers tell a slightly different story. CPI inflation is still the red number here. Look at the blue one. It's services inflation. Makes up the bulk of the British economy, stubbornly high, above 6% for a long time. The Bank of England's been watching closely. They'll be pleased to see this decline, softening in that inflation. The yellow line's goods inflation. That's been subterranean below zero. That's now coming back up, which the Bank of England will also welcome. Food inflation, we should make a quick point here. We saw food prices rise enormously, but they've been falling for 15 months, again, until today. A little increase in food inflation, that will be one that consumers will keep an eye on. I should say that prices are still about 20% higher than they were. It's the inflation that's returned closer to normal, not the overall prices. What does this all mean for interest rates? That will concern mortgage holders, borrowers and savers alike. Well, the market, this red line shows the expectations of the market. They think there's going to be a further cut. We can see here the Bank of England raised interest rates on that staircase, plateaued, 0.25% cut last month. The expectations are 90% that there'll be a cut in November and another one in December, with those cuts continuing. Similar expectations in the United States, where their inflation figures have come in about 2.9%, in line with expectation. I think one thing we can say on either side of the Atlantic, those days of super low interest rates that we might have got used to, well, they are a thing of the past.